Good morning, everybody, and welcome to this week's weekly analysis session for the Elite Traders Club on Monday, the 29th of June, 2015. I wonder what sort of a week we're going to have this week. A lot of news over the course of the weekend with the situation in Greece and the Prime Minister over there unable to make a decision on what he wants to do, suggesting that he have a referendum and leave it up to the people to decide whether they're going to accept the Euro's conditions on them lending money. Greece, the home of democracy. All right, let's get underway. And just a reminder, we do have our Elite Academy coming up for both Elite Traders Club members and also Elite Investors Club members at the end of August, so the 28th through to the 2nd of September. We've got a terrific schedule this year lined up. Some topics to really extend you, particularly in the areas of trade management, market risk psychology. That's a topic that we haven't spent a lot on. Forex as well. We're also going to be looking at how we can actually choose to use fundamentals in conjunction with technical analysis. So Jeff and I will be running a session on that in particular. As well as various other strategies, some options-based strategies as well, which will be nice, our ETF strategy. So certainly, if you've got time in your diary, come along, make yourself known, make some new friends, and do some more learning. And just some of the nice sites up at Sanctuary Cove. Right, our disclaimer before we get underway says the content of this presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So before making an investing decision based on the general advice presented in any of our presentations, you must consider whether the advice is appropriate in light of your financial circumstances or seek further advice on its appropriateness. All right, the agenda for today, we're going to go back and recap our portfolio management. What's the market telling us at this point in time in terms of market risk? We'll then go through and have a look at some specific setups and also culminate with some Q&A. All right, let's go through and check our benchmark index or indices, plural of index. At the moment, in the ASX, we remain in a high-risk market. So you'll see red on the screen there. Last week being fairly terrible, and we'll have a look at some charts in a moment that will certainly support that high-risk market condition at this point in the time. As such, we use a 40% market risk multiplier. If you don't know what that means, get in touch with your Elite Traders Club coach, and they will helpfully explain that to you. The S&P 1500 remains in low risk. Bizarre, isn't it? These current circumstances around the world with everything that's going on, and we are low risk in the US. But still, that's all we can do, follow our benchmark indicator, and it's telling us at this point in time that we are in low risk, and as such, we need to apply a 100% market risk multiplier. So, if you are splitting your capital between the US and Australia 50-50, it means that because in Australia we are in high risk, we use that 40% market risk multiplier. We apply that to half of our trading capital, and as a result, we have a maximum allowable value at risk of 3% currently. If you are only investing in Australia, and assuming that you are allowed a 15% maximum drawdown, then your current level of exposure would be 6%. If you don't understand that, give one of your Elite Traders Club coaches a call and we will be happy to explain it for you. In the US, if you are, again, 50-50, you are allowed to expose that 7.5%, which is half of your 15. You're allowed to expose all of that currently to the market. So that means you can have a value at risk of 7.5% of your total portfolio. If, however, your sole market is the US, you are allowed to apply 15% of your value at risk to that particular market. Again, if there's any confusion with that, please give us a call and we'll be certainly very glad to help you along the way. Those of you who are still choosing to scale out because we are in high risk in Australia, then you are looking for 1-to-1 targets. Those of you who are scaling out and your predominant market is the US, you are still looking for 3-to-1 type targets. And there are a number of opportunities there this week that have that have set up, even against the current backdrops as we speak. All right, just a reminder that don't forget, on Wednesday afternoons we have our coaching sessions. This week it's part 3 of the Trading Journal. So if you haven't caught up with the last 2 weeks on the Trade Journal, don't forget to log into the portal there, where David Seal's done a really good job of recording some lessons on the Trade Journal. Friday afternoons we do our macroeconomics session. That's myself and Jeff. Last week talking a little bit about some of the data coming up this week and a recap on the week that was. The watch list should be out before lunchtime. Today I've just got to enter the new pending trades. All the stop losses, etc. have been updated. Let's go through and check the markets now. So first cab off the rank. Importantly, first step, we need to check the market risk. So we've just gone through this in the actual slides. This is what it looks like in Beyond Charts with our benchmark index there, the S&P 1500 in the US. You'll see a couple of weeks ago we did happen to dip down below our 80 level, between 80 and 60, which took us from what was a low risk market at the time into a more moderate risk market. More recently, stochastic just moving back up above 80, putting us back into low risk again. I'm mentioning it doesn't quite feel like it with all the news around the world, but again, this is what we need to rely upon, and not so much our newspaper headlines. In the Australian market, you'll see that we continue to move further and further down. Now the stochastic firmly entrenched between 60 and 40, putting us into a high risk market mode at this point in time. I've just drawn on there a little bit of a channel, just showing the behaviour of our market up to this point in time, where every time we try to rally back up, we move back down. Again, last week, classically coming up to this particular line, putting in a small pin bar at the top, a bullish candle before. It looked really good the previous week, only for us to turn around and be slammed down back towards the more middle part of this range. We really need to start seeing some demand creeping into our market. A lot of stocks from a fundamental point of view, I was discussing this with Jeff the other day, are probably starting to reach reasonable prices again. So hopefully this will turn around and we'll start to push back upwards. Yet to see what the impact of the situations in Greece is going to be, whether that's already been factored into the markets or not. Certainly, excuse me, time will tell. So as you see at the moment, we're in high risk market mode. It's going to take a little bit of price action to drag us back up into more moderate times, but let's just wait and see. Certainly at this point in time, really protecting of your capital at this point. Don't be in a hurry to add any new trades to your portfolio. Let's just wait until that market risk improves a little bit before doing that. Well, let's go through and have a little bit of a look at some of the other markets around the world. Who would have thought there were any problems in the Eurozone? This is the Nikkei. This has been a really, really strong performing index of late. Lots of white candles, and again, showing really good relative strength compared to some of the other benchmark indices around the world. The Chinese market, Friday afternoon, dropping around about 6 to 7%, that last candle. So lots of volatility creeping in this particular market, all sorts of things going on over there in terms of how their politicians, if you like, are concerned about the amount of capital and freely available capital, and reining in some of the risk requirements, I guess, as on the basis of how they're lending money in the Chinese market, and as such, when there's a bit of fear and how they might tighten the purse strings, etc., a lot of selling is going on over there at this point in time. So very, very volatile market. Had been performing very, very strongly up until about the last month. That's the Nasdaq. Certainly a little bit more directional of late than what the S&P 500 has been, and the same with the Dow. That's the Dow. You can see very much up and down, really just going sideways broadly, and that's the beauty of using relative strength in our stock selection against the key indices, in particular the S&P 1500. That's the Russell. That's a mid-cap based index. Certainly, again, offering good directional strength when compared to those other benchmarks as well. Right, let's go back to the Australian market and have a little bit of a look. So this week in the Australian market, there was only one new setup, and that's it on the screen, APE. So let's go and have a little bit of a look at how this stock has behaved in the past. So I just want to zoom out 100% and see where we are. You'll see there that quite clearly we're in blue sky territory. Again, zooming out, you'll see that the relative strength of this particular stock has been quite consistently above the zero line, meaning that it's been outperforming the benchmark index for quite some period of time. Now, if we zoom in and apply our price action filter, having a look at the formation of the most recent troughs, and last trough certainly well clear of the second from last peak. So exhibiting really strong price action, good relative strength, and as such we just need to wait for the break of the medium term peak. Now previously this wouldn't have been a setup because you would have been concerned about $10 being a round number. We're not paying any attention to the round numbers, that's up to your discretion, but jury's out on the impact of round numbers. Certainly you'll see through $8, went up to $8, had a little bit of retracement and kept on going. A really strong candle last week, and as such our structure for this particular trade is an on-stop order at $9.87 with a limit 1% above that level to $9.97. Protective stop, I've got two in there. One's at $8.86, which gives us a risk on the trade of around about 10%. The other element I was looking at in terms of this is this large black candle here, where quite clearly we can see demand coming in below there. So whilst this second last candle has been picked out as the trough, because this is the point where the short-term downtrend, this was stagnation the last three candles prior to that point, turned around into a short-term uptrend. So what Beyond Charts has done is it's drawn in that last candle as being the trough. So you can either choose to use that trough, or alternatively you might like to have your stop further down, again making sure that you're outside of your two ATRs, and be a little bit more conservative and go below the low of the large black candle with the tail on the bottom. If you do happen to do that, then the protective stop is going to be at $8.58. It'll give you a slightly wider stop of around about a 13%. So that's basically what you might refer to as a trough proxy in this particular example. Don't see it all the time, but it's just one there. If you're a little bit more conservative, you could take that into consideration. That was all there was in the Australian market for this particular week. We had two stops that we trailed during the course or at the end of last week, and also AOG. I'll just try and bring up AOG as an example. AOG. And on this particular, just make sure that that's on a weekly chart, and we'll just scroll in for a moment. And I just want to explain to you, obviously, in this particular instance, our initial stop down here at $2.44, and during the course of last week, price action was such that AOG actually came down very, very low and penetrated its initial 2 ATR protective stop. Now remember, these are soft stops. So now what we need to do, that we've breached that initial soft stop, is we now need to convert that to a hard stop. So to convert that to a hard stop, we take the low of that particular candle. So I'll just move them across there. A little bit too far. The low there, 241, and we place a hard stop 0.5% below the low of that candle. So that's now got a hard stop at $2.39. So that's the process of converting a soft stop into a hard stop. That's AOG. TCL was another one, so I'll just type that one in. Transurban Group, same thing for it. You'll see that it's come down and it has penetrated its original protective stop, again, which is a soft stop. So it's exactly the same procedure. The low of TCL last week was $4.49. So placing a hard stop 0.5% below $9.49, and that has a hard stop at $9.48. Only a little bit below that, so we'll have to see what the market's going to do with this particular stock this week. With everything that's going on in Greece, I'd expect that there's a fair chance that that one may well be stopped out. That's TCL. One stop out for the week was Sydney Airports. I just want to go through this one as an example. Remembering that your job as part of your trade management is to work out when you have forthcoming dividends along the way. And I'll just pop dividends on here. You'll see that during the course of this week there was a dividend that came out. Now what you need to do when you are aware that a dividend is coming out is you need to alter your protective stop downwards to take into consideration the dividend and any franking credits associated with that. The amount of the dividend, making adjustments for that, moving that protective stop down. As a result, it didn't make any difference. The price of this particular stock, Sydney Airport, still closed below its 3 ATR when making those dividend allowance adjustments. So just an exercise there to go through, make sure that you're aware of when the dividends are coming out, adjusting the protective stop, but still having your rules in there, so that even in the event that you do get a dividend declared, if the price is still dropped more than the ATR, then therefore using your ATR rules, closing below that, then our rules say that we must be out on market on the Monday morning. All right, let's go over to the US, where there's quite a number of pending trades this week setting up. So I might go back to the top of the list. There were around about 20 odd trades, 20 odd setups over the course of the weekend. Going through all of those. Some of them are some quite nice setups, particularly given what the market did last week as well. So obviously some showing some very good relative strength, which is always a good sign to be seeing along the way. All right, the first one on the list was AAN. So let's just scroll out and have a look and see where this one's been. Zooming all the way out, you'll see that quite clearly we're in blue sky territory, which is obviously a very, very good sign. Some big swings up and down of recent times, coming back up to an old long-term peak here, which we've had a first test of, and we're now coming up for a breakout trade. So let's just zoom in a little bit and have a look. All right, so on this particular one, you'll see that the last candle, again, the last 2-3 weeks of candles have actually shown pretty nice price action, given what's happening with the rest of the market. Clearly outperforming the market, and just recently starting to increase their own rate of performance as well, which is always a nice sign. Last candle certainly has just cleared our last medium-term peak by a little bit. Now remember, we do have a rule that says we're still allowed to get into a trade if it's past that last medium-term peak, but we've got to set a limit as to how far we let it go. Now remembering that we're saying, for our rule, we're not allowed to enter the trade if it's moved more than 1% past the most recent medium-term peak. The most recent medium-term peak there is at $36.70. So it's okay to get into this trade as long as our last candle hasn't moved more than 1% past that $36.70 level. At this particular point in time, the high of our last candle, you'll see there, is at $36.98. So we have an on-stop order set 2 pips above that at $37. Now our limit is 1% above the high of our medium-term peak. So our limit is 1% above $36.70. So our limit then becomes $37.06. So we've got a small range in which to enter this particular trade. So the trade for this one, AAN, Aaron's Inc., on stop at $37 with a limit to $37.06, and your protective stop at least 0.5% below that most recent medium-term trough, and outside of 2 ATRs has your protective stop at $33.26. That's AAN. Next one on the list, I'll just move my value line out of the way a little bit, is Atlas Air Worldwide Holdings. again, last few candles starting to look fairly good. You'll see there, not much movement in terms of the body of the candles, but some nice tails on the bottom. Last week, nice strong candle. Again, considering what the rest of the markets have been doing, nice relative performance as well. Let's just zoom out and see where we are. You'll see here that we've got a long-term peak back in 2011, so we do need to respect that, given that there will undoubtedly be some people who bought the stock up at this particular level who are still holding on to it and have had to sit through all this pain, and as such are likely to want to get out once the stock moves back up to, for them, what is break even. So we do certainly need to respect that particular level. Let's just zoom in and have a bit of a closer look at the setup. So on this particular one, entering 2 pips above the high of our medium-term peak. The price action on this one, very good as well. Last trough, well clear of our second from last peak. There's the last peak, there's the second from last peak. So as such, structure for this trade, on stop at $59.49 with a limit to $60.08. Our protective stop is at $51.88. And I've just drawn in there the green line, which you can just see on the top of the chart there, is a long-term peak up at $73.19. So clearly plenty of room for the trade to move up to that particular level, to that old long-term peak back from 2011. That's AAWW. Next one, Advanced Energy Industries Inc., AEIS. It's a bit like Old MacDonald, isn't it? On this particular one, again, let's zoom out and see where we are. And you'll see that the last really significant levels of resistance, these longer term peaks, are way back in 2001 and 2000. That's prehistoric at that particular point in time. So we're not going to be concerned about those. So we're certainly at this point clear of anything, even back from 2003. We're past any 2006 levels of resistance. So let's zoom in and have a closer look for the structure of the trade. Again, most recent long-term peak, we've come up already, having our first test of that. Shallow retracement. Interesting that last week we had a black candle and yet we still put in a short-term uptrend. And as such, by confirming a short-term uptrend, it means that we've also had at the same time formation of a higher medium-term trough. In terms of relative strength, been outperforming the broader benchmark. Obviously, the last candle, a little bit weak in comparison to its more recent behaviour. Other than that, clearly able to structure a trade. Price action, last trough, well clear of the second from last peak. Last peak, second from last peak. So nice price action there. We just need to break above the most recent medium-term peak. So as such, the on-stop order becomes on stop at $29.52 with a limit to 1% above that level at $29.81. Protective stop you'll see down at $26.27. That's certainly well clear of that last medium-term trough and outside of our 2 ATRs. That's Advanced Energy Industries. Next one on the list is Activision Blizzard. Activision Blizzard feels a bit like a blizzard in Melbourne at times. Let's just zoom out and have a bit of a look. Again, all-time highs. So we need to ask ourselves, how has this stock managed to get there? Recently, it's had a little bit of up and down type of movement. And again, if we just examine the sort of movement that we've had in more recent times, you'll see that we've got these old levels of what were resistance now acting as levels of support. We've got some ceilings as well. Nicholas Davis would be all over himself with this particular one. Price now starting to move outside the box here, moving out, starting to have a little bit of a retracement of what was the top end of the box. And as a result, we've got a new trade set up. So let's just zoom in and have a little bit of a look. All right, so all we need to think about here is what's our price action doing. Last trough at or above second from last peak certainly is. All we need to do is clear this last medium term peak. Last week's candle, a little bit bearish. but still putting in a higher high and higher low, so therefore confirming a short-term uptrend, and at the same time also confirming the formation of a new medium-term trough. We just need to wait for the breakout on this particular setup. So the breakout will occur at $26.11. That's our on-stop order, with a limit to $26.37. Our protective stop needs to be at least 0.5% below that most recent medium-term trough and outside of our 2 ATRs, and as such, protective stop comes in at $24.04. That's ATVI. Next one on our list, Estee Lauder companies. So I think Estee Lauder, correct me if I'm wrong, ladies, perfume, or is it clothes? I'm not too sure. I'm sure my wife will tell me what Estee Lauder does. Maybe it's a bit of both. Where has this stock been to? Let's go out and have a look. All-time highs once again. Why is that? Obviously, something is particularly good about this company, and the market likes it, and as a result has been pushing it up, outperforming the market over recent times. Obviously, during this particular point of time when there's been a lot of sideways action, a little bit of underperformance, and again, once we clear this particular level of sideways price action, moving out, retesting the upper levels of what was an area of resistance, now starting to exhibit stronger price action along the way. So as a result, we have a new trade set up, an on-stop order 2 pips above our last medium-term peak, has an on-stop order at $90.35 with a limit to $91.25. That's 1% above that on-stop level, and a protective stop at $84.26, well away from our last medium-term trough and outside of 2 ATRs. That's Estee Lauder. Next cab off the rank, EQIX. Let's just zoom out again and see where we are. A lot of a history going way back to the early 2000s, so certainly there are some longer-term points of resistance on this, but as far as we're concerned, this is really back in the dinosaurs. It's not relevant at this point in time. It's ancient history. So let's have a bit of a look at the price action on this one. Last trough being confirmed by this last candle, which has a higher high and a higher low when compared to the second last candle. As such, we have a short-term uptrend in place now, and by virtue of that, have confirmation that a new medium-term trough has been formed. That trough well clear of our second from last peak. So good strong price action there, despite what is a black candle on the end of it. So as such, we just need to wait for the medium-term peak to be broken, and then we have a trade being triggered. So on that basis, waiting for that to happen, we have an on-stop order at $274.15 with a limit to $276.89. Protective stop coming in at $249.40. That's well clear of that last medium-term trough and also outside of 2 ATRs. That's EQIX. Just a question for you, everybody out there. At the moment, you'll notice of the last 2 or 3 weeks, I've been writing as an annotation on the charts the on-stop levels with limits and stops. Is that something that you would like me to continue doing? Are you getting value out of that? Or would you just prefer to check the watch lists? Helpful, William says. Great. All right. Marianne. Yep. Fantastic. Mark. Terrific. Okay. All right. I feel like I'm on the switchboard here and it's all lit up. So that's great. Okay. That's fine. Good. I'll continue to do that for you. Next one on the list then is ETFC, which is E-Trade. So again, a lot of nice white candles through here, so that's looking really nice. Good relative strength. Recently, last week outperforming, which is also a nice sign as well. Again, there's no guarantee that just because we have a white candle on the last period that's going to continue. Neither on the other side of the equation, if we have perhaps a more bearish candle on that last candle, no guarantee that we're going to continue to see that bearishness. We just need to wait and see. as to whether they trigger or not, and on what sort of volume they trigger on as well. Always nice to see a breakout on some increased volume, just to give it that nice original push. So E-Trade, whereabouts are we in the scheme of things with E-Trade? Wow, you'll see from where E-Trade was, wow, look at that, $800 back in 1999. Amazing. Yeah, it's kind of, that's pretty significant. I wasn't aware of that how high that price was. I was zoomed out before to have a look and see where all the resistance was, but really didn't take much notice of the fact that was at $800. It's now down at $30. Interesting, isn't it? These stocks that were once that high. I hope nobody who bought it at $800 has now got it down here, unless of course there's been a stock split along the way. But normally Beyond Charts would adjust the charts accordingly. You'll see how this has really bottomed out for a significant period of time. So it's taking basically an eternity for this thing to start moving up. At this point in time, obviously what we need to think about is, are there any levels overhead that might be significant? Now, certainly just going back in time a little bit here, what I'm looking for is a long-term peak. So when we go through this area back here, I'm looking for a medium-term uptrend on the left-hand side and a medium-term downtrend on the right-hand side. So this point up here is a long-term peak. Other than that, are there any medium-term uptrends going up and medium-term downtrends coming down? There's not. So the last significant long-term peak is all the way up here at $263.22. That's a mile away from where we are now. So this is a stock that's certainly on the rebound. It's bottomed out, exhibiting nice strong price action of recent, a lot of nice white candles, confirming a short-term uptrend at the end of last week, and as such forming a new medium-term trough, which is well clear of our second from last medium-term peak. So as such, we have the structure for a new on-stop order at $31.43 with a limit to $31.74. Our protective stop coming in at $28.68. That's ETFC, E-Trade Financial. Next one on the list, Goodyear Tire Rubber Company, GT. Why have I drawn a box in there, you might ask? Well, let's just zoom out and have a little bit of a look at where this one's been in the past. You'll see a history back here in 1996, where the stock was priced at around about, looks close to around about $85 thereabouts. Since then, price has come down, has moved back up to this particular level through here. So let's just go in and have a bit of a look as to what we've got. Medium-term uptrend through here, and then eventually we end up in medium-term downtrend. So the highest point between our medium-term uptrend and eventually what becomes a medium-term downtrend is a long-term peak. So we need to be mindful of that. If we go through this, let's go through and have a look at our peaks and troughs. So we've got higher troughs and higher peaks, which is the definition of a medium-term uptrend. A medium-term downtrend, we must have first lower peaks, then lower troughs. So when do we actually get lower peaks and lower troughs? I think you'll find through here that we've got lower peaks and lower troughs, and let's go through and just highlight that. So the high there is 31.36, and the next peak is 30.79. So we have lower peaks, our trough coming in there at $26.58, and our next one coming in there at $25.34. So we've now got lower peaks and lower troughs. At this point here, we have a trough which is at $23.83. This trough here is at $24.31. So that trough is higher than that trough. This peak is higher than this peak. So we have medium-term uptrend and we have medium-term downtrend on this side. So this is what we would call a long-term peak. Through here, we have a peak and then we have a lower peak. But do we have a lower trough? That trough there is coming in at 23.83. This trough here is coming in at 24.31. So we don't yet have a medium-term downtrend. Because this is not a medium-term downtrend, but this is a medium-term uptrend, this is not a long-term peak. Okay, so as such, we don't need to give way to that. This is just part of medium-term uptrend stagnation. Okay, so we don't need to give way to that. This, however, through here, which we have just passed, is a long-term peak. And we are just coming up to that particular level now. We're just passing. We've had a retracement. We've just got to get a little bit higher. This rectangular section here, I've drawn that in just to show a period of sideways movement. And you'll see that what was once support is, again, acting as support into the future. These previous levels of resistance have now been broken. The clue that this thing was ready to move outside of what is effectively a box is the fact that we've got these rising troughs. So let's just zoom in a little bit. These are the sorts of clues that we're looking for when we're looking for stocks that are exhibiting the right sort of price action, and again starting to increase in relative strength, which is really nice. So nice rising troughs. Last trough that's been formed, well clear of our second from last peak, and as such we just need to get past our last medium term peak here at $32.76. So we have a non-stop order at $32.76 with a limit to $33.08 and a protective stop at $32.16. That's GT, Goodyear Tyre and Rubber Company. Next one on the list is Integra Life Sciences Holding Corporation. Let's just zoom out and see where this one's been. IART. Again, blue sky territory. So let's just zoom in a little bit closer and check things out. Certainly been outperforming for a good period of time now, which is good. Nice price action. The last trough, considering what the market did last week, last candle, quite strong in relation to market activity last week. As such, confirming a short-term uptrend and at the same time confirming the formation of a new medium-term trough. That trough well clear of our second from last peak. So as such, we have an on-stop order for IART at $70.34 with a limit to $70.65. That's 1% above our on-stop level. Protective stop coming in at $64.52 outside of 2 ATRs and well clear of that most recent medium-term trough. Next cab off the rank, Gartner IT is the stock code. All right, let's have a bit of a look. Where has this stock been historically? We're at all-time highs, which is a good sign. Obviously, very, very strong stock. The market's been chasing this one for a period of time. A little bit of stagnation through this particular area down here. In fact, even putting in medium-term downtrend, so long-term peak through this particular level, which we're now well clear of, and price having moved above what was previously a long-term peak right at that level there. So that candle there. Given that we've got lower peaks and lower troughs on the right hand side, and coming into that we've got higher troughs and higher peaks. So that's the previous long-term peak, which price has just moved past, having a bit of a retracement, looking to move onwards and upwards. So once we break through the most recent medium-term peak, we'll have obviously a new trade being triggered. So as such, the on-stop order for this one on IT is $89.12 with a limit to $89.68 and a protective stop coming in at $82.70. Last candle there, putting in a higher high and a higher low. So as such, confirming that we're now in short-term uptrend. Would have been nicer to see a little bit more bullish candle than that. But again, we just need to wait and see what happens with the breakout. We're never too sure what's going to happen exactly on that particular point in time. You will notice that on that last candle, that it is slightly higher than our last medium-term peak, which is at 88.80. and the high of that last candle coming in at 89.10. So we have a slightly reduced limit on that. So the limit is actually based on the medium term peak. So 1% above that $88.80. The limit is up to $89.68. But our on-stop order is 2 pips above the high of that last candle. Remembering that that last candle actually did go a little bit past that last medium term peak. So our on-stop order is at $89.12. You'll see that that last candle, the high, was $89.10. That's IT Gartner. Next cab off the rank. Too many value lines on there, David. Let's get rid of a couple. And let's move him out of the way. This is MELI from the previous week. Still hasn't triggered in yet. That was last week's candle. The week before, we had a nice bullish candle confirming short-term uptrend. It came up on the scans. I thought I'd leave it there. It's a pending trade from June 22nd. Some of you might have that in your on your platforms waiting to trigger. Last week's candle, not that bad in comparison to what was going on with the rest of the market. That's from last week. Another new one for this week is Magna International. So let's zoom out and see where we've been. Again, too many value lines there, David. Let's get rid of one of those. Delete. And let's get rid of him for the time being too. We can see that we're in all-time highs. And let's just zoom in a little bit more. In terms of price action, last trough coming in at well above second from last peak. You'll see there, nice gap between those two. Short-term uptrend being confirmed, medium-term trough at the same time being confirmed. All we need to do is wait for a break of our last medium-term peak. So order becomes on stop at $59.44 with a limit to $60.03. Protective stop at $54.70. That's MGA, Magna International. Next one on the list, Mitsubishi UFJ Financial Group. Let's see where we've been. Okay, certainly a history years ago when this stock was up around $30. More recently, back in about 2006, up at around about the $18 mark. Just need to zoom in and see if we've got any longer term peaks through here. Let's go through and have a little bit of a look. So what am I looking for in terms of a long-term peak? I am looking for higher peaks and higher troughs on the left-hand side and lower peaks and lower troughs on the right-hand side. At this particular point in time, do I have higher peaks and higher troughs through here? No, I don't, but I do have lower peaks and lower troughs, so certainly medium-term downtrend. What I'm looking for to classify a long-term peak is a confirmed medium-term uptrend prior to hitting that medium-term downtrend. So medium-term uptrend, I must have higher troughs followed by higher peaks. Anywhere through here, do I have higher troughs followed by higher peaks? Well, I have higher troughs, but I have lower peaks. Lower peaks, higher troughs. Lower troughs, lower peaks. Higher troughs, lower peaks. Lower troughs, higher peaks. So a whole lot of stagnation going through there. So again, I need to go back in time a little bit further to see whether I've got any long-term peaks around. So again, I'm looking for higher troughs and higher peaks. Is that peak higher than that peak? Doesn't look like it. Let's check it out. The high coming in there at 1437. The high coming in there at 1428. So I've got higher troughs but lower peaks. I still don't have my medium-term uptrend. Go back a little bit further. I've got higher troughs and I've got higher peaks. So I certainly do have medium-term uptrend on the left-hand side all the way up to this point. Then I'm looking for lower peaks and lower troughs. All right, we know that these two peaks are lower, and quite clearly from the chart we can see that this trough is lower than that trough. So now we certainly do have medium-term downtrend confirmed, medium-term uptrend confirmed. We have a long-term peak now on our charts. So let's go through and see where we are. In terms of that, we've got a fair bit of upside by the looks of it to get back up to that around that $16 level. So at this point in time, the last price action on MTU has been quite solid in that this last trough, which is now formed, is well clear of our second from last peak. Last peak, second from last peak as well. So as such, on stop order for MTU at $7.64 with a limit to $7.73. Protective stop at $6.94. Let's have a look. PVTB, Private Bancorp. All right, price action on this one. Last trough there, you can see being confirmed by the last candle, confirming a short-term uptrend. So as such, we have the formation of a new medium-term trough. Last trough, well clear of second from last peak. So exhibiting nice, strong price action. Let's just zoom out and have a bit of a look at where we are. In terms of current pricing, last significant point of supply coming in at this particular level up here at $55. So let's just draw that line in. So on the left of this, we have quite clearly higher troughs and higher peaks. So we have medium-term uptrend on the left-hand side and medium-term downtrend on the right-hand side. So as such, this becomes a long-term peak. That's the only long-term peak that is relevant in terms of this one. So we do need to be mindful that we've got that long-term peak coming in, coincidentally coming in at around about that $50 level as well. So just being mindful. Do we have sufficient space between the structure of our current trade and where that long-term peak is coming in? Certainly we do. Certainly at least 1-to-1, getting close to 2-to-1 on that particular setup. PVTB. A lot of white candles through here, so showing some really nice strength in terms of this last candle. Certainly nice strong candle. You will notice that the last candle has actually breached the previous medium-term peak. Is it still within 1%? Yes, it is, only just, and as such you'll see that our on-stop order becomes 41.46, which is 2 pips above our last candle there, 41.44. So on stop at 41.46 with a limit to 1% above our medium-term peak. That last medium-term peak was at $41. So as such, our on-stop order at 41.46 with a limit to 41.50. Our protective stop at $37.02. That's PVTB, Private Bancorp. Must be getting close to the end of the list alphabetically. Come on, Beyond Charts. I know you can do it. I think it's getting tired. There we go. Argen. Zoom out, see where we are. All-time highs. So things are looking very nice for this particular stock. Really started to accelerate of recent times as well. Certainly last 3 candles on this one have been very, very strong. I'll have to check the watch list whether this one was in last week. It should have been, given that our last candle there has most definitely got a higher high and a higher low. If it wasn't, it's certainly going in this week. Hasn't triggered as yet, but very, very close to doing so. In terms of price action, last trough well clear of that second from last peak. Our protective stop at least 2 ATRs away and at least 0.5% below that most recent medium-term trough. We've just got to break through our last medium-term peak, and as such, structure of our trade on stop at $42.45 with a limit to $42.87. Our protective stop coming in at $35.70. That's RGEN, Repligen Corporation. And the next one, when you're ready, Beyond Charts. I'll just twiddle my thumbs for a second or two. There we go. Charles Schwab Corporation, SCHW. Let's see where this one's been. Okay, so as you can see, last really significant points of supply way back in 2000. It's irrelevant now. It's back in the days of the dinosaurs. What's it been doing of recent times? Well, certainly we've had a period of stagnation, sideways movement, and as a result, you'll see that particularly on the short term, a little bit on the medium term started to underperform. Recently breaking out of that sideways type of crab walk, if you like. Moving out of this now, coming back to test the underside of what was effectively a stagnation zone, putting in higher troughs along the way, so exhibiting good price action. And the last candle, nice and strong last week in comparative to the rest of the market, confirming now a short-term uptrend. As such, at the same time, confirming a new medium-term trough, which is clear of our second from last peak. There's our last peak, there's our second from last peak. Our ATRs are such that our protective stop needs to go down at $30.98, which is well below that last medium-term trough, outside of our two ATRs. So the structure of our trade is on stop at $33.80, with a limit to $34.05. Protective stop, at $30.98. That's SCHW. Next one. When you're ready, be on charts. There we go. SNPS, Synopsy Inc. Again, let's zoom out and see where we are. Blue sky territory. Good relative strength of recent times. Let's zoom in, check out our price action. Last week's candle, higher high and higher low, so therefore confirming a short-term uptrend is now in place, and at the same time confirming the formation of a new medium-term trough. Last trough well clear of our second from last peak. So good strong price action. We just need to wait for it to break through the last medium-term peak. As such, on stop order at $50.83 with a limit to $51.33 and a protective stop at $47.75. That's SNPS. I think green means go. There we go. St Jude Medical Inc. All right, let's zoom out and see where we are. All-time highs. A good sign. Again, coming out of a period of basically sideways moving action where previous levels of resistance have now acted as points of support. Ceiling type formation here where prices come up to these previous levels on a number of occasions, each time stripping out any supply along the way, breaking out, coming back, retesting above these previous levels, so exhibiting good strong price action on the basis of that. As such, that last trough coming out in well clear of our second from last peak, so we just need to break through our last medium term peak. As you'll see, this last candle has a high of 76.33. Our last medium term peak was at 75.73. So this one in particular has a much narrower limit, and you'll see that reflected in the structure of the order. So an on-stop order at 76.35 with a limit to 76.48. That's 76.48 is within 1% of the high of our last medium-term peak, and as such still qualifies as a valid setup. Our protective stop outside of two ATRs below that last most recent trough. Protective stop at $70.54. That's St Jude Medical Inc. I think we must be getting pretty close to the end, up to the T's. Again, whereabouts are we? Well clear. Again, look at the relative strength on this for a long period of time. This trend has certainly been very, very strong over the years. Again, a lot of white candles showing throughout. Last trough, which has just formed, the low of that last trough coming in at the low 224.11, and that's second from last peak. The high coming in at 224. So 224 versus 224.11, so it's 11 cents higher than the second from last peak. So that ticks the box in terms of meeting our rules on the trade. Let's just zoom in a little bit so we can see the structure of the trade there. On stop at $232.20 with a limit to $232.67. Again, a much narrower range of our limit, and that's because you'll see that our last candle has already passed our last medium term peak, but it is still within 1%, so it still qualifies as a setup. Our protective stop still needs to go at least 2 ATRs away from our entry level and must be at least 0.5% below that most recent medium term trough. So the protective stop there is coming in at $219.79. So just to recap, on stop at 232.20 with a limit to 232.67, protective stop 219.79, and that is on TransDigm Group. Let me move that one out of the way. TDG, there you go, is the stock code. Can get a bit messy on Beyond Charts, can't it, with all those value lines. And come on, Beyond Charts. Anytime soon would be good. There we go. Time Warner, let me get rid of a couple of these value lines. Let's tidy it up a bit. And move across to the right hand side. So first of all, let's just scroll out and see whereabouts we have been. A couple of value lines on there. Let's get rid of those. Right click and delete. And delete. So again, blue sky. Recently just having broken out of a bit of a sideways movement. You'll actually see there's a gap in this stock about a month ago. Since then, having a bit of a retracement, still being held up, given what the market's been doing recently, and particularly last week, holding up nicely well above that gap. So as such, we just need to wait for price to break through the last medium-term peak, and we've got a setup for another trade, given that that last trough is well clear of our second from last peak and well clear of any other remaining points of supply as well. So TWC, Time Warner Cable, on stop at $184.91 with a limit to $186.75 and a protective stop coming in at $168.87. Up to the T's, can't be too many. There we go, VRX, which I think is the last one on the list. Just zoom out. Been very, very strong over the last couple of years. Recently breaking out of again, this sideways type of movement. The clue that, these old points of support acting as future points of support, old points of demand, future points of demand, old points of supply acting as future points of supply, and then once broken, demand coming right in above that level. So something obviously very favourable about this particular stock. Spent a long time going sideways, broken out now, clearly exhibiting some very strong price action. And we're just looking for that price action to continue along the way. So as such, we just need to wait for a break of our last medium-term peak. Last trough coming at well clear of our second from last peak. So as such, an on-stop order at $246.03 with a limit to $248.49 and a protective stop coming in at $221.35. I think that's the last one on the list. Yes, it is the last one on the list. So any questions, guys? Kim says RGN was not on the list. That's okay. It'll certainly go in this week. Good. SCWUA and SWM to go. UA. Okay. So Schwab, I'm gathering there. Ken, UA. Let's have a look at UA. Under Armour. Come on, Beyond Charts. Very slow Beyond Charts on my computer here the last week or so. I'm not too sure whether Any of you experiencing the same sort of thing? Let's have a look at UA. Let's put on a swing chart so we can see peaks and troughs. So if we have a look at this, Ken, as an example, the last trough that has formed on this particular one, where is it in relation to the second from last peak? I think you'll see just through drawing a line here, if Beyond Charts will let me draw a line. What about the value line? I'm right clicking and good old Beyond Charts is not allowing me to put that on. Hopefully, let's just zoom in a little bit if I can. And Beyond Charts is not wanting to cooperate this morning. It's being a little bit petulant. But anyway, I think you can see on this particular one here that this last trough coming in below the second from last peak. So as such, the price action is not as strong as what we would ideally like. William PMC. I'm going to try and bring up... Oh, look at that. I think my Beyond Charts has cracked it. And unfortunately, it's going to be a little bit difficult for me to keep showing some of the things that I would really, really like to. Frustrating, annoying, completely. Even trying to close it. It looks like, oh, here we go. Now it's probably going to try and do 10 things at once. Let's cancel that for a minute and let's hope that we can bring in some other ones with a bit of luck. Okay, there we go. William said PMC. Let's have a quick look. PMC. I think that's the one that William's talking about. There we go. Let's have a look. Put on a swing chart. Let's zoom in. And first of all, let's just check. Yep. Okay, in terms of where are we in the scheme of things, we're at all-time highs, so that's at least one good thing. Just in terms of price action on this one, William, certainly, you know, last couple of candles have been quite reasonable. Just the price action on this one, the last trough coming in below the second from last peak. So it wouldn't meet our price action filter in terms of that by virtue of that fact. That's all. That's on PMC. Okay. I'm not able to hear you, but I can view, says Beryl. Okay, not too sure why that is. William, yeah, in terms of setups, etc., if you were going to be trading that, obviously 2 pips above either the high of the medium-term peak there. But again, just remembering the price action filter, we wouldn't have it in on that basis. That's all. Steve says no audio. Hopefully you can still hear. Maybe it's just my computer that's playing up there a little bit and being a bit slow. So hopefully you can still all hear. That looks to be it. GT, Kim's mentioned. Let's go back to GT and have a look at that one. Come on, Beyond Charts. All right. So Kim's just mentioned, forgive me, but the high you discount as long-term peak would actually be significant long-term peak by deferral. Let's go and have a look at this one. And GT, let's just zoom out again on GT to where that long-term peak was coming in there. So through here, what Kim's saying is that this old point through here, with a bit of luck if I can put my horizontal line on there, that by deferral, basically a proxy, what he's saying, a proxy long-term peak, coming in at this particular level, highest point between medium-term uptrend and eventually what is a medium-term downtrend. So whilst we had what by strict definition a long-term peak was this point through here, that the highest point between what was originally our medium-term uptrend and eventually medium-term downtrend, this point back through here, is a long-term peak, and I concur 100% there, Kim. That is by proxy a long-term peak. So as such, giving way to that particular long-term peak, it's just a matter of whether we have sufficient space on our trade to get up to that long-term peak. We've still got enough space in there. Certainly clear of 1-to-1 in terms of the structure of the trade, taking into consideration that long-term peak proxy. So certainly still a valid setup, but absolutely 100% right there, Kim. By deferral, long-term peak as well, so well picked up. Any other questions before we go? I can see that we've been an hour and 4 minutes. Ken says, do you only add the best of the best to the watch list? The trades that I've gone through, certainly I'll add them all in. They're all exhibiting exactly the right sort of price action that we want. That is, troughs well above the second last medium-term peak. So price action exhibiting that. We're never going to know which of these particular trades are going to trigger. So from that point of view, we're relying on the strength of the price action, the fact that demand is increasing for these particular stocks, the fact that they are all outperforming the broader benchmarks. Obviously, what we want to see when the trades are triggered are trades being triggered in with lots of volume. Now, you're never going to know that until the actual trade triggers. So you need to wait and see what's going to happen with that. So sometimes, as the example will be, some of these trades that you've looked at, you'll see that the last candle certainly could have been stronger last week in respect of what was going on with the rest of the market. This week's a totally new week, and again, we're not too sure what's going to happen in the markets, what this next week is going to hold, and some of those more bearish candles on the end may in fact turn around and become white candles with lots of volume and have a nice big breakout. So again, we need to wait and see. I'm not forecasting anything, just structuring the trades appropriately in line with our trading plan, and the market will do what the market's going to do. So certainly hoping that this week we don't suffer too much from what's going on in Greece. Anyway, that's sufficient for me for the time being. It's been a fairly long session, a lot of trade setups there. So again, I should have the watch list out before lunchtime. There are certainly a number of trailed stops in the US. There was 26 trails last week. There were also 3 cancellations. ADI was a cancellation, CHDN was a cancellation, and CYNA. This will all be reflected in the watch list in any case, but just make sure you cancel those if you've got them. There were 4 triggered orders: OUTR, SEM, SPR, and VAC, all triggered in last week. Some of the trades certainly in the watch list are progressing along very, very nicely, so hopefully some of you have been able to get on the back of some of those. If you're trading in the US, which is hopefully a number of you, the Aussie market continues to struggle up to this point in time. That's enough for me. We'll catch up with you or keep an eye out for David Seal's session on the Trade Journal on Wednesday afternoon this week. That'll be up, and until Friday when we have the macroeconomics session, we'll catch up with you then, alternatively next Monday at the same time, 9 a.m. Till then, bye for now.